And the red flag, Corey, he made money for most people every single year.
Right.
Every year. If the market is down and you make money, you need to know why. Like you need
Correct.
even though that might feel good, right? You should be asking your advisor, I understand the S&P 500 was down 18%. How come you're showing I made 10?
Right.
What did you do?
Sure.
And I'm not saying it's necessarily a red flag if they did that, but you need to know exactly what happened and they need to be able to prove that.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Jake, thank you for having me.
Cory, you got anything new you want to share on a personal note before we dive into some of our financial topics today?
You know, Jake, I'm enjoying the snow that we're getting here in the Midwest. How about that? It's January, but this is when it's supposed to snow. A little too much, but this is when it's supposed to snow.
I liked it when it snowed. I don't know if this is global warming or what. I liked it when it snowed before Christmas and in Thanksgiving. I feel like, I don't know, maybe it's just me, but I feel like now winter is coming after the holidays, and I like winter during the holidays. I like it to snow on Thanksgiving. I like it to snow on Christmas. And then January, I'm over it. Maybe it's because maybe in Texas where I grew up, that's what happened. I don't know, but I'm over it. Where's spring? Give me some spring, Cory.
You know, this is paddle weather right now, Jake. I'm playing tonight. This is paddle weather.
Good for you. Dress warm. Be careful out there.
Yes. What's with you?
I got one for you. Have you watched that Jerry Springer documentary on Netflix?
No.
Hey, man, it's sad. It's really sad, actually. Were you a big Jerry Springer fan? Did you watch the show growing up?
I was in school, but you know. So
what do you mean you were in school?
Wasn't it on while I was at school?
yeah, but they probably did replays. They probably did replays or whatever.
Yeah, I remember it being on. Like I remember it I remember it being on and watching it some. But I remember there being a lot of controversy.
Jerry.
That's right.
So here's the deal. I thought it was fake. But according to the documentary, it actually wasn't. And Cory, they actually have a Springer Triangle in the United States where most of the people came from. This is what's sad about the show. So they have these producers on there that basically are getting inbound calls from people that want to be on the show and listening to the story. They would like wine and dine these people. So they would fly them in, pick them up in a limo, get them up in a hotel, but then they would start feeding them alcohol. And then when they would come into the show, they'd be like hungover. And then these producers would like get in their face and they would be like, this person did you wrong. Like you should be upset about it. Like they would basically stir the pot on these people, these poor people, get them all emotionally charged and then send them out on stage. And that's why these fights would break out. They would get them like they would pull their strings, their psychological strings. And then the show's over and these people are like, all right, see you later on to the next show. And it's like, so it was sad. It was really sad, actually.
That is.
You know, he overtook Oprah for a short time.
No, I didn't. That doesn't surprise me, but I don't know if I knew that.
So, and he was mayor of Cincinnati.
Yes, I did know that.
Yeah. So, anyways, I don't know. I'm not necessarily blaming anybody. It's just sad. I don't recommend watching it. Don't recommend it unless you're a Jerry Springer fan. I mean, it was a good documentary. It's just sad. It's sad that I don't think I call that capitalism, but maybe that's a byproduct of capitalism because those producers were savvy and they're like, it's all about ratings. That's it. And the more extreme they can make that show, Cory, the higher the ratings went. And so that's what they did. That was their job.
I can't help but draw parallels to that, our political arena and social media in the world today, Jake. It's the same thing. It's just playing out differently.
Oh, good point. There's that begs the question, Corey. There was an argument that maybe Jerry Springer was the gatekeeper to opening that up and making it appropriate to act that way in public.
Mm, that is a very compelling and interesting point.
Now,
Maybe.
I don't think you could blame one person or one
No.
show because I would argue if Jerry Springer didn't do it, somebody else would have. Somebody else would have come along and there would have been a Cory Bittner show or whatever. Probably not
Right.
you.
Here, get you all hungover. Be like, all right, they did you wrong, Jake.
I don't know. So, but anyways, so it was crazy, sad.
Yeah.
But yeah, so that's kind of the latest
Interesting. No, I don't
documentary.
think I'm going to watch it, but that
No,
is
I don't
yeah.
recommend it.
All right.
Sad. All right, so let's go into some financial topics. First off, though, I do want to thank our audience, Corey. Our subscriber count on Upticks continues to grow. So
Yeah.
credit to our audience. Really, really
Yes.
great. Thank you guys for everyone out there tuning in, watching, listening, or reading Upticks. Please like and share our content. If you're not already subscribed to our weekly email newsletter, simply email Luke at falconwealthadvisors.com and Luke will get you subscribed. Also, if you have any suggestions for the show, you can also email Luke and he will be happy to share those with Corey and myself. So again, we've got it on video, we've got it on audio, and then it is being transcribed. You can read it also. So thank you again for everybody out there. And thank you, Luke, for producing such a great show and not making me be Jerry Springer. Because I
That's
don't want to
right.
do that.
Thank you, Luke. Shout out to Luke.
So, all right. But on a financial aspect here, Corey, I know you had something you wanted to bring up, but I kind of jumped ahead of you in line here just now. I was reading last night before I went to bed about another financial book. And in this book, I haven't read the book yet, but in the book, or I don't even know if I'm going to read the book, the author talked about I've never heard of this, a spending cleanse. You ever heard of this?
I think I have. Yes, actually.
So this is where you would go, make sure you've got enough groceries, make sure all your bills have been paid, and then you go as many days as you can without spending any money.
Mm.
$0, Corey. And I think the idea is to open up your mind to other ways to entertain or consume things without spending money. So instead of going and seeing a movie, maybe you go for a walk in the park, right? Or you go play platform tennis instead of going to Target or whatever, Costco,
Sure.
whatever, so, or buy nothing on Amazon. I wonder how long people can go without buying anything on Amazon. That would be an interesting thing.
It would be embarrassing in my house, Jake, with the baby. Like every other day, man. Something's showing up.
So I thought that was cool. I've never done it. I have gone days without spending money. Normally, if the weather's bad, right? If I'm like let's say it's going to snow all weekend and Rachel and I go to the grocery store like on Friday, I won't leave the house. I'll read, I'll watch TV, I'll exercise all at home, and I won't spend a dime, and it feels great. But there's other times when I go out and spend a lot of money. So I think it's cool. The whole point is just to bring awareness. That's
Makes
it. Bring
perfect
bring
sense.
awareness.
I mean, it
to your
seems
spending.
very. Sorry to cut you off, Jake.
Go ahead.
I was going to say it seems very similar to the idea with food cleanse, diet, whatever it might be, right? That you're just sort of
Right.
trying to sort of flush it out, bring awareness to it, and then look at it from a fresh perspective. I like it.
Yeah, good. All right, Corey, you said you want to talk about annuities and share a real story before we get into headlines. What do you got?
Yes. So first off, one of the headlines I'm going to talk about today is going to include annuities, Jake. But I wanted to talk about this because I had a meeting since we recorded our last show with a prospective client who was in a situation where several years ago they were sold an annuity. They were sold an annuity with the expectation that as funds could be surrendered each year without any penalty, that they would surrender them and do something else with them. So what I wanted to share here, Jake,
Weird.
first off, I know. And I asked the question, what's the point in buying the product if you're going to start surrendering it a year later? But that's beside the point. This particular individual went through the situation, Jake. We talk about it all the time. Bought this annuity, surrendered what he could penalty free to invest in some other investment that his advisor directed him to that turned out to be a total and complete fraud, and the money was gone.
Really? That's horrible.
Yes. And this guy has been working for several years to basically recoup these funds, and it was a portion of what went into the annuity. But the reason I wanted to bring this up today, Jake,
Hold on.
please.
So was the annuity a fraud or the other money, the money he was taking out and putting it into was the fraud?
The latter, the money that he was taking out and investing in something else. That
So
was
the
all directed
annuity
by the same advisor.
so the annuity was a legitimate investment product. By the way, we don't like products, Corey and I. And then this advisor was siphoning out money and then supposedly putting that in something else, and instead he was stealing it?
No, he said that he was having the client invest the money into some different type of alternative investment, some firm down in Florida where this advisor flew down there, did his due diligence, blah, blah, blah. And it turns out that it was a fraud.
Wow, it's horrible. I hate to hear
It
that.
is. And the reason I bring this up, I know it is horrible, but I think it's important to talk about this because there is a
It is.
reason, Jake, that you and I bang the drum the way that we do around these investment products, because that is a perfect example of something that people don't think will happen to them.
Right? And it happens all the time. You know what's crazy? I'm glad you brought this up. I'm reading a book about Bernie Madoff right now that my wife bought me for Christmas. It's called I think it's called The Final Word. Have you heard of this book?
I've heard it's great. I've not read it.
Oh my gosh, you have to read it. You have to read it. I think
I will.
everyone in our audience should read this book. Because Corey, there were so many red flags with Bernie Madoff that people overlooked.
Yep.
And I'm not going to downplay how much of a villain this man was. However, the people involved with him were also very greedy. And I'm not saying your client or this person
Sure.
with the annuity was at all. Sounds like they got completely fooled. They were taking somebody's advice. But you have to be vigilant. Like, it's like a circus, right? Like you go to the circus, you know those games are going to try to rip you off, right? That's how it is out there. That's the real world. There's full of people running scams and frauds, and it was, but Corey, it was way more people than just Bernie that were. I don't want to say directly in on it. They were just willing to see a blind eye or ignorant or didn't care. It's
Right.
just it's nutso to me that it's a fascinating book, by the way. It is fascinating. And it's crazy. So you've got to be vigilant. Here's the red flag though. I'll tell you about the red flag at which is crazy to me. There was no way for anyone to access their account online. He did not allow anybody to do emails with clients. And so you basically just got this paper statement in the mail. That was it. That was proof of your account.
And I suppose if that paper statement, go ahead.
And the red flag, Corey, he made money for most people every single year.
Right.
Every year. If the market is down and you make money, you need to know why. Like you need
Correct.
even though that might feel good, right? You should be asking your advisor, I understand the S&P 500 was down 18%. How come you're showing I made 10?
Right.
What did you do?
Sure.
And I'm not saying it's necessarily a red flag if they did that, but you need to know exactly what happened and they need to be able to prove that. Because otherwise, that's a huge red flag. Huge red flag. So anyways, it's a great book. I highly recommend everyone read that book.
I'm going to read that one.
You should read that one.
Not watching the Jerry Springer documentary, but I will read that book.
It's good, man. I'm I'm over halfway through. It's a page turner. It's really good. So, all right. Are we about ready, Corey? Is it time? Let's do it.
Do it.
Play ball. All right, fire away.
Let's get into our headlines, Jake. You are up first here. Chasing the highest yield savings account. Is it more trouble than it's worth?
Yeah, so it's this juggling act. For years, Corey, people were used to their bank not paying them any money on their cash. But now that the tables have turned, is it worth going out there and shopping for the highest yielding savings account and opening up another account, further complexing your situation just to make 4% on your cash versus 0? Right? That's the question here. Do you need to go spend all the trouble, split up your checking account, open a high yield savings account, probably online with a bank, maybe that you've never done business with? Is that worth the trouble? I'm going to go pros, you go cons.
All right.
Pro here, Corey. Yes, I would say higher returns, right? You get high yield savings account. They typically offer better interest rates compared to traditional savings accounts, which will help you earn more money on your deposits. Credit to me for bringing this up. Yes, it's worth the trouble.
Got to be careful of the conditions, the restrictions, though, because many high yield accounts do have conditions like minimum balance requirements or limited withdrawals that, frankly, can be inconvenient for people.
Yeah, look at the fine print. Good one. Another one, inflation, right? Inflation, I think, just came in this morning, Corey, at around, what was it, 2.9, I think? 2.9%. So again, it can help you keep pace with inflation. The whole idea is if your cash is making you 4%, inflation is only 2.9, you are not losing purchasing power. Credit to you for using that high yield savings account. What's another con?
Market volatility, the interest rates, really, I guess interest rate volatility, I should say, that they're going to fluctuate, obviously, with market conditions that could lead to potential instability. But again, I think that would just have more to do with the rate that someone's earning.
Well, yeah. Because again, an alternative is you could invest the money in a bond, for example. You could buy a treasury bond, for example, and lock in that 4% perhaps for 3 years versus when you're in a high yield savings account, that thing could change any month.
Yep, any month.
So good. So my argument though, Corey, is that it is worth the trouble. I don't care. I don't care if it's $10,000. 4% on 10 grand is $400 a year versus zero. So what? You got to spend an hour of your time to make $400. Not a bad deal. Setting up the account, getting it all managed, linked, whatever. I think it's worth it, in my opinion. But again, do your due diligence. And another key piece here, because we just talked about fraud, make sure that whoever you do this with, that they have FDIC coverage, that they're reputable, that you've heard of them. If it's a bank you've never heard of, don't do it. It's not worth it. Like, you got to know who this company is. Make sure they've got FDIC insurance before you go into any type of relationship with a bank on there. Okay, good, Corey. You ready? Ready to move on?
I am.
All right. Whoa. You stuck a chart in here? Is that what I'm seeing?
Oh, yeah.
All right, here we go,
I'll
Luke.
get it on you, Jake.
Here we go, Luke. Corey, the CPI and the Fed. You got a chart?
Yes, we've got a chart here, Jake. This chart is showing us what the monthly CPI prints have been the last 5 years. And what I wanted to bring up here today and just talk with you about, Jake, was after the CPI data released this morning that you talked about, CPI inflation has been running above the Federal Reserve's made up 2% target for 44 straight months. And my first question, Jake, is if you missed a target for a client for 44 straight months, would you expect accountability?
Right. What was that?
My question for you is if you missed a target for a client for 44 straight months, would you expect accountability?
Yes. Sorry, There was a big car driving by.
No, I heard it too. That's right.
Yes, for almost 4 years, I told a client that I was going to do X because that's what the Fed said. The Fed said we're going to make inflation. Our target is 2%. We are going to raise or lower rates to make it 2% for almost 4 years. So, what do you think, Corey? The Fed needs to be fired? Is that what you're saying?
I'm saying that there should be some accountability. If their target is 2% and they missed it for 44 straight months, what I really want to talk about, Jake, is I want to talk about the pros and the cons of CPI inflation running hotter than expected for an extended period of time.
Okay, so you're going to go pros on this one?
I'm going to go pros. You're going to go cons. So I'll start with the pros.
So you're saying, wait, hold on. You're saying it's better for it to be higher than the 2% is what your pros are.
Correct.
All right, let's hear it.
All right. So the first one, a pro of inflation running hotter than expected for an extended period is economic growth. Higher inflation can sometimes indicate robust economic growth as increased demand for goods and services drives up prices.
Yeah, Corey, but the con here is that your dollars don't go as far, right? So you have reduced purchasing power, meaning my $100 doesn't buy what it used to 5 years ago.
Right. But the economy is growing. I think the second one, Jake, is debt relief. Inflation can reduce the real value of debt, making it easier for borrowers to repay loans with cheaper dollars if purchasing power is diminished.
That makes sense. Okay, another con here is there's a lot of uncertainty. If you have high inflation, like how high is it going to go? How high are my bananas going to cost me in 3 months? It's can be scary.
Right. But there's wage increases. That's another pro. Workers may see higher wages as businesses adjust pay to keep up with rising prices, which could potentially improve living standards.
Do businesses really do that, though?
Don't know. Probably depends on the business.
Right. And then the last con is interest rates. Interest rate hikes. The Fed raises rates which can increase borrowing costs and slow down economic growth. When they do that, they can do that.
Which is what happened for several in the last 5 years. We saw that right through 2022 and 2023 with rates moving higher, but now they've moved lower. So that there was one more con on there, Jake.
Yeah, there's another con, and actually, I brought this up with my my home audio video guy yesterday. Told me about this. There's income inequality gets further, which is sad because the wealthy people, inflation doesn't really impact them that much, versus people in like below the lower middle class. It does impact them more, and so I don't like that furthering. And he was basically saying his big expensive jobs are still coming through, but the lower end jobs, the cheaper jobs, people are holding off, and because probably all this uncertainty, right? So he's dealing with that right now as a business owner.
Yep. Yeah, which again, the reason I bring all of this up, Jake, is to say that, while inflation can be beneficial, I know we've talked about this a lot on the show. Sustained higher inflation poses challenges for consumers and the broader economy. And my bigger point here, Jake, because of the pros and cons that we just talked through, is that if inflation is running above the target for 44 straight months, is that not the intention? Is there really a concern about actually getting that to 2%? We've talked through the pros and cons, but I observe that and think, what's the benefit there?
I agree. I think the Fed shouldn't say that. I think what really drives inflation is consumer behavior. Because if we refuse to pay for those increased bananas prices or whatever, right? If we refuse to buy it, Corey, you know what'll happen?
Prices come down.
Exactly, because they won't be able to sell their bananas. But the problem is it goes back to income inequality. The wealthy people will buy the bananas because they can afford them. But I guess you got to do it at a large enough scale where if more people aren't buying it, then the price will come down. It's come down. I know I saw one of these charts maybe you showed or we looked at the other day were TV prices. Right? TVs are way cheaper than they were when that first plasma came out, and it was like a big deal. They were very expensive, and that's just interesting. I don't know why. Maybe it's cheaper to produce one, obviously, but like
if only those TVs could provide healthcare or housing. Only if only.
Right. But I'll tell you what. What's worse than inflation?
Deflation.
Look at you. You know me too well. Deflation. So I just want our audience to know that, yeah, sure, we don't like the price of groceries going up, right, or whatever you're trying to consume. But I'm telling you, if we had deflation, it would be horrible. And the reason is when you have deflation, meaning everything, not just TVs, but everything is getting cheaper, what happens is the economy will shut down.
Contract, yeah.
And nobody will buy anything because they're just going to wait for it to be cheaper. And then when everybody stops consuming, companies stop making money, so then people get laid off. So I would much rather have a low unemployment rate and inflation be at 2.9 than a high unemployment rate and low inflation, if that makes sense.
Yeah, right? Which really was the era that we lived through after the financial crisis until the pandemic, really. The unemployment was higher, inflation was much lower. I just find I find it interesting now that those are the years that people yearn for the lack of a better term.
Right.
That people remember the era with higher unemployment and lower inflation. Now unemployment's lower and inflation is higher, and people want it to go back the way that it was. And I just bring it up to say that I don't know who's got it right or wrong, Jake, and I hear you loud and clear as far as deflation goes. But I just wanted to shine a light on the fact that here's what the data is. And I think the idea that inflation is cooling, that's a narrative. That's it's a fact, but it is something that still very much has an effect on people. And I think it's just mindful to acknowledge what that looks like. And I think you bring up a great point that our behavior does drive a lot of it. Not all of it, but a lot of it.
Right. Yeah, so the grass isn't always greener. I think it's a juggle, and that's the problem.
Right.
That you're not going to get a perfect, more than likely, if it is perfect, it won't be perfect for long. So the Fed's got a tough job. I'm not blaming the Fed. I think they're probably too bold in probably what they say sometimes, but like.
I think we should have a say in who's part of the Fed, personally. Like, if they're going to make these decisions, we don't elect them. There's no accountability. That's my issue, but that's beside the point.
Do we elect anybody really, Corey?
Well, we elected the next president.
Did we?
One way or the other. Yeah, fair question.
We could start going down conspiracy
My point
theory.
is, it's a very important job that has a very real impact on a lot of people. And I just my perspective is there should be more of a focus on hitting the target if that's really the goal.
Yeah, I don't think they should be elected though, Cory, because then it turns political.
That's fair. And I suppose it might already be but
It
I
is.
hear you loud and clear there.
It is, but I think it would just get worse. It would get then you want to talk about like then the Fed will start muddying all kind. Like I just think the less I get it. There's no perfect way. Maybe AI should be the Fed.
Maybe.
So maybe somebody should write a program and let that be the Fed. Who knows?
Yeah.
That might be the wave of the future. There, I might have figured
It could be. Who knows? But anyway, thank you for letting me bring that up. Bring the chart back to the show. You might have some more in the future here, but that's what I want to talk about today.
I like it. I dog the charts, but I like it. Let's go to the next one. We got 2 more here to go, right? Because I'm going to get your annuity one since you brought it up.
Yes. All right, Jake, you're invited to Wall Street's private party. Say you're busy.
That's right. So I think you kind of alluded to something like this on an earlier show, but basically this article is from the Wall Street Journal, and it's talking about there's a growing popularity of private alternative asset ETFs. So basically, these are exchange traded funds that are getting the retail investor access to what historically has been reserved for institutional or accredited investors, which are like private placements. So this is stuff that's not listed on a New York Stock Exchange. So you could think of like, I don't know, if you wanted to invest in a building or a business that's privately owned, right? So that doesn't have a stock ticker. That's what I'm talking about here.
Okay.
So go ahead. Do you have a question?
Yeah. So the assets themselves don't trade on the public markets, but the ETFs that are designed to mirror the value of those assets do.
Right.
Okay. Got it. Go on.
Right. So yeah. So it's like you buy shares of the ETF that is publicly traded, but the portfolio in the ETF has real estate, private equity, commodities. And again, these were historically only available to wealthy people or institutional people. So again, typical Wall Street, just bundling up another product to sell to make more fees. Now, here's the pro, and you can do the cons, and I want to share a quick personal story. So a pro is this is a private alternative asset ETF. They're democratizing it, Cory. So now everybody can get access to what before would be argued was only reserved for the rich or the institutionalized. You got a con?
I do. Yeah, market volatility. The value of those ETFs is going to fluctuate with market conditions, which could lead to instability in returns. But more specifically, the value of these ETFs is tied to assets that are not liquid.
Right. So another pro, though, the ETF is liquid. So you can sell the ETF even though you couldn't sell the asset in there.
Okay, got it. But the alternative assets are complexity, right? They're more complex, and a deeper understanding of the actual underlying investments inside the fund, I think, is crucial.
Yeah, and there is some transparency because ETFs are required to disclose their holdings. So you guess not all vehicles have that. So there's a little bit more transparency with the ETF.
Costs, though, fees, right? Generally lower than traditional alternative investments. I would imagine the ETFs are still going to have management fees that impact overall returns.
Yeah. Here's the deal. I know I put this article up here. I have a personal story about this real quick. And you know what? Your annuities might have to wait for next episode.
That's fine. It's fine.
You always end on a long one. Your thing has like...
Yeah, there's too much there. But it's good. We should save that for next week anyway. So let me hear your story.
It'll be a teaser.
That's right. Tune in next week.
Learn more about why we hate annuities. Why we hate annuities next week. So that's a good one. That was a good one. So, Cory, I almost did this. Now, I want to be clear here. I'm not saying that. I don't even know though. So here, I was going to invest in a private placement personally, believe it or not. And this is why. I've got a financial plan. Of course, my financial plan's in great shape. I invest in the stocks and bonds. And my income is tied to stocks and bonds, right? So it's a little double whammy for you and I.
Sure.
So I was like, okay, you know what? My net worth is really good right now. I've got some extra cash. Why don't I diversify and turn some of this money over into the private markets and let somebody else go out there and invest in private markets? And I was filling out, I got it approved with compliance, so they signed off on it. And I was literally doing this week, Cory. I was going through the application and I balked. I completely balked.
Really? Okay. All right.
Yeah.
Good.
And I just didn't feel comfortable. Like all of my investments, not like line by line, but like my stocks and my bonds, they are attached to a goal in my financial plan. And the problem I had with this private placement is that it literally could go to zero, which I understood the risk. It could go to zero. Very a very real risk. Not like, oh, the stock market could go to zero. Like, no, no, no. These companies are very in their infancy. Like they could just fail.
It's a very real outcome for many.
Very
Yep.
real outcome, right? Or it could go up 1,000%, which I don't really. That doesn't really excite me weirdly
Okay.
because I wasn't going to put enough money in there that going up 1,000% would really change my life. So I kind of
Mm.
just I started, and then all the fine print and like I'm like, I know the guy that runs was running it, so like I do know him pretty well, and I would say I trust him. I know him well enough, but I was just like, what am I doing? Like, why am I putting money in something that could go to zero or make 1,000% when there is no place in my financial plan that says I need that?
Mm. Maybe you need an ETF that buys all those, Jake. I'm just kidding.
No, no, no. I don't want that either. I don't want that
Teasing.
either. So
Good for you. Good for you.
So, like, I don't want to be a hypocrite, obviously, but like, I was asking Rachel. I didn't ask her to answer this question, but I just posed it. Like, if a client asked me if they should do this, and they were me, I would probably tell them, "Yeah, go ahead, because you can afford to lose the money. If that's what you want to do, you can afford to lose whatever you're going to put into it, and your plan still works. Then fine." But my point was like, yeah, but I don't want to do that. I don't want to lose that money.
Right. That's not why
Even
you're
though my
doing it.
Yeah, even though my plan can afford it, I don't want to do it. Who wants to go into something thinking there's a real chance that you could lose all your money? Like, why would I do that?
Yeah, I hear you. I hear you loud and clear. I mean, I think it's a risk reward element, and I think that some people, just operate that way as far as high risk goes. But I think that my perspective, Jake, is that you, our clients, myself, all of us work very hard for the money that we are able to accumulate. That we should respect the work that goes into generating the income, and then invest the money wisely and prudently.
Right.
Instead of just saying, if it blows up and goes to zero, I'll just start back over. That's something that's sort of unique, I think, to the culture in our country. Actually, is that taking big risk like that. But I also think that there's a time and a place and a person that makes sense for. But I think when it's trying to be sort of something that becomes available to the masses, I feel like that changes the whole dynamic pretty meaningfully.
Well, which is crazy too, is what I was doing is not available to the masses. Right.
That's a good point.
I'm an accredited investor, so I am able to get access to, and I still didn't do it. I
Right.
still didn't want to do it because, again, I just didn't feel. Now, that doesn't mean I won't ever do it.
Sure.
But today it did, and I don't know why. You would think I would have max risk being that I'm in the business, but maybe some would argue I'm a little bit risk adverse, and maybe it's because I know that you can lose your money.
Correct. I am confident, Jake, that's it, because I'm the same way. It's the same reason that you and I are not gamblers, right? We're not.
Right.
We're just not, because it's different, but it's similar. We know, we really understanding the risk, I think, is a big part of it.
Yes, and what's good, great. You know what? I can make 1,000% in the stock market too. That is possible.
Right.
So it's like, why do I have to go through all these legal hoops and go into a universe of where I don't know very much about it at all? And by the way, the fees are high. The fees are very high. Where I could just go buy stocks, like I've been doing, and it's worked out for me pretty well. So, again, I want to encourage our audience to learn from me. The good news is I didn't have to make a mistake. Now, maybe the argument is like, Jake, you should have done it. You would have quadrupled your money. But I don't really care about that. That wasn't the goal with that money.
That's good.
The goal was actually to diversify, and I think there's other ways to diversify, is my point, than do that.
That's really good. I'm glad you shared that, Jake, because I think the key is understanding what the goal really is.
Right. Credit to me.
Good job. I'm glad you shared that, because I think that is that's good for folks to hear. It's good for me to hear too, frankly, Jake, just because I think that you are spot on, and I appreciate that you recognize the risk, and I do too. And I think that sometimes the potential risk is what is not always clear to people.
Right. Exactly. All right, good. Well, thank you, Cory. I know we went over time here a little bit. Thank you so much for joining me this week. And thank to all of you for tuning in. Please like and share our content, and we hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.